Hi, everyone. I hope you're doing okay. My name is Abdullahi. I hope that last session was useful for you, and I hope you don't have any questions that are not answered. And I hope you have practiced a lot so that you don't have anything that is unclear from your last session. Someone has asked me a question about the MetaTrader app, and they have asked me where they can download it. You can Google it and download it from the websites there. So today we're going to start talking about the technical analysis. And the first analysis and first method that we're going to talk about is the trend line method. It's one of the most popular tools for analysis. And it's going to tell you if your trend is going to be ascending or descending, or what's going to happen to it, or where you should enter or exit the market, or where you're going to have reversals or retracements. It's going to show you all of these. So trendline is a tool that is used in most of your tradings and analysis. So I advise you to always use this strategy in your analysis. So to start, you have to have two swing highs and a swing low. What we mean by that? You see, for example, when you have an uptrend, when your trend is ascending, you're going to draw your trend line from the bottom of your chart, like that. And it's necessary for you to have two swing highs. This is one swing high that was completed on the bottom, and another one that is a little bit above that one. So your second swing high has to be above your first one, excuse me. So I'm going to locate that for you. This is my first swing high. And this is my second one. And in your uptrend, I have a reverse V shape like that. So to draw the trend line, if you have an uptrend, you have to draw the trend line from the bottom of your trend. So I have to connect my first swing high to my second swing high, like that. So that is how I draw the trend line. So it's necessary for you to be very precise when you're drawing your trend line. This shadow that your candlestick has here, you see that the first swing high has a shadow, and I have connected that shadow to the shadow of my second swing high. So a lot of analyzers, for drawing this more precisely, they connect it to the body of the candlestick. So I connect the first swing high to my second one, and I have a reverse V shape here. So when you can have these two swing highs on the bottom, you necessarily have a swing high at the top. So let me click on the line so it's activated, and if I click on it twice, it is going to be activated, and I can long press the control button on my keyboard and I can drag it up, so now I have a parallel trend line here. So usually I've seen most of the traders drawing this in their own special way. There are many methods and ways to draw the trend line that depends on you. I have drawn it here where my decline has started. This is my main decline here that has been started from there. And I have connected it to the highest swing high that I've had in the middle. So it is showing me that I've had an ascending trend there. And it's in a very visible channel. So imagine we don't have this part of the chart. Or if I want to be more precise, ignore this part of the chart. So I have one swing high here and another one there. To identify and locate your swing highs more easily, you can use fractals. In here, in your Billy Williams item, you can choose fractals item, and you can see the fractals right now. So what do these fractals do? They tell you and show you the swing highs on your market where your price has been closed, and the new price can't go any further than the previous one. That is when you're going to have a fractal. And based on the fractals, you can locate your resistances in your market where your price reaches them and it retraces. But right now we're only talking about trend lines and fractals. When we're talking about pivots, we're going to talk more about this. So based on fractals, you can locate your swing highs more easily. You have one on the bottom and one on the top, and you have another one here. So imagine we don't have this part of the market, and you may think that this one is another swing high. But you see, you have to consider the one that is on the bottom, and you have to connect it to the highest one that is after it. If I draw it like this and I connect the swing high to this one, that is for the past of the market, not at the moment. That is just a partial analysis for me. But in this time frame, we see that, and imagine that we don't have that part of the market and it's only this part of the market. So this is your chart and we want to analyze it right now. So I can consider this swing high here and this one that is right there. So in here I have two walls. And this channel is, we have an ascending trend and it's telling me that I'm having an uptrend. So where can I start buying or selling? You see, your best opportunity, I'm repeating this, your best opportunity to trade are the walls of your trend lines. Excuse me, for my voice. Okay, so the walls of your trend lines, they mean that I can, for example, when the price reaches this trend line but doesn't go any further than the trend line and it has gone up, I could start buying here. Buying can happen here. Okay, so I could buy there. Let me adjust the line here. And when it reached the top wall, you see that I've had an uptrend up until here, this top wall. But usually you have to exit earlier than that. Don't wait until the price touches the upper wall. You have to exit sooner than that, before the price touches the wall. So that's when you can close your deal. Excuse me. Okay. You can close the order in this point. It means that I could have started buying here. I could have opened a buy order in this area. And up until here, I could have gained profit around 553 pips. I could have gained that many profits. And then I will wait to see if the price touches my trend line and if it goes further than the trend line or not. If it doesn't, and if it gets far away from the upper wall and then it declines, I can start a sell order here. I could start selling at this point, like that. And in the lower wall here, when the price is close to my lower wall here, I can close the deal again. So as you can see, based on the trend line, I've had two very good opportunities to trade. I have drawn the trend line here. I have started buying when it was at the bottom of the trend line. I was online on the market and I have closed it, or maybe I have put something there so it closes by itself. So try to close the deal a little bit before the price touches the trend line. So when I see that the price is declining after that, it means that I'm going to have a downtrend and I shouldn't buy there, and everyone is selling. That's where I can start selling and close the trade before it reaches my lower wall. So in my 4-hour time frame, I could have gained 500 pips of profit, around 580 pips of profit here in 3 days, and 300 pips in here too. So I could gain around 900 pips of profit easily. So that is the trend line for you. Let me delete these. So in here, the candlestick or my price has gone up and then it has declined again. I could have started buying here and I could have expected to reach the top wall, but it didn't happen. So I could have predicted that based on the Fibonacci tool, that whether my price was going to retrace there or not, but I'm going to talk about that in the future. I'm just talking about the trend line strategy right now. So in here, the price has gone further than my main or central trend line, or you could say that it has broken it. It has gone further than it. So in here, I know that the uptrend that I've had, it's a warning for me that the uptrend is going to become a downtrend. So I shouldn't expect the price to go up again. So you should wait for the confirmation. What will be your confirmation? You see, when the price goes further than the wall here, if two candlesticks are completed outside of the trend line, it's giving you a confirmation that it has broken the trend line and you're going to have a downtrend. And you can start selling there because the main trend line that I've had, the central one, has been broken. It's been unreliable, so I'm going to have a downtrend and I can draw a new trend line. When your trend line breaks, you can draw another one and update it. A very important point here is that when you have an uptrend, you have to draw the trend line from the bottom. You have to consider the swing highs that are at the bottom of the chart, and the parallel will be at the top. But if your trend line is broken from the top, you should be very optimistic. It is telling you that the uptrend is still going to be continuing, and I'm going to buy. So when the upper trend line is broken, you don't need to be worried. You, you should be optimistic that you're still going to have an uptrend. But if your lower trend line is broken, it is called, or we call it, the uptrend is weak now and it's going to be a downtrend. So when the lower central trend line is broken, I have to draw a new one. So when we have a downtrend here, we have two swing highs at the top of the market. So I will connect this swing high to the lower one. This is my first swing high here. And this is my second swing high. So that's how I identify and locate the swing highs. Let me highlight it for you like that. And in the past you've had this swing high and this one. All right. Like that. You see, an important point about trend lines is that the best trend line is the one that has 3 swing highs and 2 swing lows. It means that if I have an uptrend, I have 3 swing highs like that, but my third one was completed in the future. So why is that? Why did I say that the best one is the one that has 3 swing highs? Because the price was able to break the trend line, the lower trend line here. And it was because of the news that was published on Friday. A news about America was published, and it made changes in our dollar charts. So it made the pound dollar chart weak. That is why it broke the trend line. So you have to pay attention to the news so that your analysis is both technically and fundamentally. So it was a very good point for trading here. I started selling based on my own analysis here, and I gained a lot of profit. So my new trend line connects this swing high to this one, which is lower than that. And the reason why I drew a new trend line is that the price has gone further than my trend line here. So let me draw it, the parallel one. This is my partial trend line here. So right now, the price has entered a downtrend. I'm going to delete the previous channel. This is my new channel right now. Okay, so in here, I know that I have a downtrend. This is my first swing high, and this is my second one, and this is my swing low. And I also have a V shape. That is a very good confirmation for me. So this is a very good point here. Please pay attention to this point. It's very important. Write it down. Please don't start trading when the price is at the middle of your channel, because you can't predict if it's going to go up or down. There is no way to predict that. So when you're a beginner and you don't know any other strategies, don't start trading when the price is at the middle of your channel. I told you that the best points to start trading is when your price is at the top or bottom of your channel. So I'm going to wait until the price reaches this lower wall here so I can start buying again, on the circumstances that it doesn't break this trend line here. So when the price reaches this wall here, and it goes further than that, you have to wait until 2 candlesticks are completed outside of that wall. So that is a confirmation for you that you can start buying. Or when the price reaches the lower wall here and then it goes up and touches the top wall here, you have to wait until 2 candlesticks are completed, and then you can start your trading, your sell order, for example. So I hope that's clear enough for you, and I hope you don't have any questions. So I was analyzing the 4-hour time frame, and I can also do it on longer time frames. So I'm online on the chart and I want to analyze the market on my longer time frames. As you can see, for example, in my daily time frame, I've had a swing high at the top and another one here. This is another swing high for me. And the one parallel to it will be this. So up until the price is having fluctuation in this channel, I have a downtrend. But in here, you can see that the price has gone a little bit further than the trend line, but it hasn't broken it yet. You can see it's broken when 50% of your candlestick has been completed outside of the line, and you have another candlestick completed outside of your trend line. So it's giving you a warning here. And there's a possibility of your trend line breaking, but that didn't happen. You've had another decline here, but then you can see that your trend line has been broken. 50% of your previous candlestick has been completed outside of your trend line, and your second candlestick was also completed outside of your trend line. So I could have started trading based on my third candlestick. So and here I've had another decline, and I could have drawn another trend line. I could have updated my trend line like that, and I could have connected the first swing high to this one. But because it has declined again, it wasn't like that my price has gone up and then it has produced another swing high, and then it has gone up again. So the price didn't do that. Consequently, I can't just update my trend line like that. Let me delete that for you so you can see. This is my new trend line. This is where the uptrend has started. This is our new trend line, and I told you up until the point that your price is having fluctuations inside the channel, I'm going to have a downtrend. So you see, as you can see here, the candlestick was completed outside of my wall here. So I can draw a new trend line in the future. The price has gone up, and I could have started buying because these two candlesticks have been completed outside of my trend line. So what have we had a decline here? It's based on other strategies and analysis, and we're going to talk about in the future. So I'm going to wait until the price declines and it forms a swing high at the bottom so that I can draw my new trend line. So I have one swing high here, another one here. Therefore, I know that my central trend line has been broken, and I can draw the new one here. It's the same as the one that we had drawn in our 4-hour time frame. So that is how I analyze the market. So we're on the daily time frame right now, and the trend line here is still reliable. The trend is still ascending because the candlestick is not completed outside of the trend line here. So the uptrend is still going to continue. I can't say it's going to become a downtrend where 50% of my candlestick is completed outside of the trend line, and I have a second candlestick that is completed outside the trend line as well. So I can draw it like that. This is a trend line. Okay, I don't think there are any questions or problems left. If you have any questions about the trend line method or anything that we have talked about, you can leave a comment on my channel, and then I can answer so that everyone else will see the Q&A. So we have another tool that is called the Fibonacci. And it's a very good and very powerful tool, and it's very popular as well, and you can predict the market based on this tool. For example, when I start a buy trade here, I want to know how long should I continue the order? How long is it going to go up? For example, I have started buying on my 100 level here, but how long is it going to go up? I'm going to use the Fibonacci chart. I'm going to move on to a shorter time frame. So the uptrend that I have right now, and then it has become a downtrend, how long is it going to go down? For drawing your Fibonacci chart, you definitely have to have a swing high at the bottom and another one at the top. So if we want to know the correction of that trend, and I have talked about corrections before, when the price is going up, it has to have a correction up until 1/3 or 2/3 of the previous trend, and then it has to repeat the previous trend. I told you that the market is all about repetition, but you have to know and identify those repetitions. So for Fibonacci, you definitely have to have a swing low here and a swing high at the top, so that you can use that tool. So it is drawn from the past to the future. It's not like that it's drawn from the future to the past. I repeat it, from the past to the future, from back to forward. I have to adjust it. I have another Fibonacci here. There's a specific method to draw it, but I'm not going to talk about it right now. You see, I have a swing high and a swing low here. So whenever you have a swing high and the price was closed there, and you have a downtrend becoming an uptrend, a swing high, you can draw the Fibonacci, but you have to have a swing high at the top of your market. You see, this is called a swing high. So you have to connect the swing low to the swing high. So in Fibonacci, we have several types of resistances. You have 23 level, 38 level, 50 level, 61 level, 100 level, 168 level, 261 level, and also 423. And each of them means that if the price reaches these resistances, it's probably going to retrace. And if these resistances are broken, your price is going to continue its movement up until the next resistance. So what I mean by the resistances, you see the lines that we have here means that if the price reaches these lines and levels, there's a possibility that the price is going to retrace. And if it goes further than the lines, there's a possibility that your price is going to continue its movement up until the next line. So the price is, for example, the 23 level here, this resistance is not a very important resistance. It's not very powerful. So where can you enter your tradings based on the Fibonacci levels? When your price has gone further than the 23 level, or when 50% of your candlestick has been completed outside of this line here, the 23 level line. So imagine you don't have this part of the chart. Ignore this. the highlighted blue part here, imagine it's not there. So I have drawn my Fibonacci from low to high, and I have my trend line as well, and the price is here right now. As I told you, you shouldn't start trading when your price is in the middle of your channel. But how can I analyze this? How can I predict and to see what my price is going to do so that I can trade when the price is in the middle of my trend line as well? Well, based on Fibonacci. You see, Fibonacci tells me how long the price is going to continue its movements. I told you that you can predict the price based on Fibonacci, and it also identify your resistances. So it's telling you how long it's going to continue its movement and when it's going to retrace, and it can even show you where you should put your take profit and stop loss. So if I want to open a sell order here, when the price is between the 0 and 23 line, I should not start trading on any circumstances. I should wait until the price goes further than the 23 level. It means that 50% of my candlestick has to be completed below this line. Or if my second candlestick is completed below my 23 level, I can start selling up until my 38 level. I can exit the trade when it reaches the 38th level, and I can gain the profit that I expected, and then wait again to see if my candlestick goes further than the 38 level or not. If it does go further than the 38 level and my second candlestick is also completed below my 38 level, I can start selling again and gain a profit up until the 50 level and then exit again. So a very, very important point here is that probably a lot of you don't know about, and unfortunately it is not pointed out by a lot of traders and analyzers, that causes big mistakes is that we expect two things from Fibonacci. It means that when I draw the Fibonacci, I either expected the price to reach the 61 level. It means that when the price goes further than the 23 level, I expect it to reach the 61 level, and then it could have a retracement up until the 23 level again. You see, your Fibonacci is reliable up until it shows me a continuation and a retracement. After that, it's not reliable anymore and it expires. So it is reliable until the price retraces to my 23 level. So why wasn't the price able to break the 50 level here? Why wasn't it able to touch the 61 level? It goes back to your market elasticity. You see, my overall trend was ascending here. So I have analyzed a part of the chart that was opposite of my elasticity. I've had an uptrend here, but I have analyzed a part that was descending and it was opposite of my elasticity. So I shouldn't expect the 61 level here. because my general market elasticity was ascending and upward. And the price is not powerful enough to go down. So why wasn't it able to go further than my 50 level? Because I'm analyzing a part of the chart that is opposite of my elasticity. When you draw your Fibonacci, the opposite of my trend, I draw it from low to high, and my 61 level is at the bottom part of the chart. So when I have an uptrend here and my elasticity is upward, and the 61 level is at the bottom of the chart, it means that I have drawn the opposite Fibonacci from low to high. So the most powerful resistance that I have is my 50 level. I shouldn't expect the price to reach my 61 level. You see, it's a very important point. When I have an uptrend and I draw the Fibonacci from low to high, my 61 level is at the bottom of the market, and it means that I'm analyzing the correction, the retracement, the part that is opposite of the market elasticity, and my most powerful resistance will be the 50 level, and the retracement is going to be between the 23 and 38 level. You see the price here has gone further than 23 level, and then in the middle of between the 23 and 38 level it has retraced again. It wasn't able to break the 50 level. When I have an ascending channel, when the price is close to my trend line, I wait for it to get a little bit far away from the trend line, and then I can trade. And because I've had a 50 level here, and I was trading the opposite of the market, I have to start trading equivalent to the market's elasticity. So I will start buying at this point, and I try to exit when it reaches my 23 level, or when it's between the zero line and my 23 level, and then I can start trading again. So it was very important. That is your opposite Fibonacci. You see, imagine we don't have this part of the market. I started selling here and gained a profit there, and then again I started buying here and gained my profit there. And when I saw that the price is getting too close to my wall, and it's also my 50 level Fibonacci, and it's a opposite Fibonacci, and I shouldn't expect the price to reach my 61 level, I start buying here again up until my 23 level. Or if I have a more precise analysis, I can exit when it's a little bit above my 23 level. So that's that. This is my opposite Fibonacci. We have another one, another type of Fibonacci, which is the Fibonacci that is equivalent to the market elasticity, and it's called the equivalent Fibonacci. So imagine we don't have this part of the chart. I have a swing high and a swing low. This is my swing high, and this is my swing low, or my swing high at the bottom. I told you that above 23 we can start trading and close the deal on every single one of these resistances. So in here, as you can see, the price has reached my 50 level, and then it has retraced to 23 level, and then it has gone up again, and it has reached my 61 level, and it has gone further than that. Why was that? It's because when you draw your equivalent Fibonacci, you see I have an uptrend here, as you can see, based on my trend line here. So I have drawn my Fibonacci from high to low, so equivalent to the market, and my 61 level is at the top of the market here, so that means that it's an equivalent Fibonacci, and the elasticity is upward. So I should expect the price to go further than the 61 level and even breaks it. So when it breaks the 61 level, I expect it to reach my 100 level. When it reaches the 100 level, it's going to have a retracement again up until the 61 level. So the price is going to have fluctuations between these resistances. When I have a high to low Fibonacci, excuse me, when I drew the low to high Fibonacci, the price wasn't able to break the 50 level because my elasticity was upward and my Fibonacci was the opposite Fibonacci. But right now I have an uptrend and I have drawn my Fibonacci from high to low. It means that my Fibonacci is equivalent to the market because my elasticity is upward, and that is why the resistances are going to be broken easily. So the price has gone further than my 61 level. Let me show you another example. And let me delete these lines here. I can draw, and I've had a partial Fibonacci here. When I say a partial Fibonacci, it means that in this trend I've had a small swing high like that, where my uptrend has started. So it has gone up and I can start selling at this point. And in here it was able to break my 50 level and reach the 61 level. Even though you didn't have a trend line, or there was no resistances on its way. So next session, when I'm talking about the pivots, I'm going to tell you that why when I've had an uptrend here, you see that I have 80% confirmation that I have an uptrend. But why was my 50 level broken? It's because of the pivots, because on its way it didn't have any pivots, any resistances. I'm not talking about the resistances based on the Fibonacci lines. I'm talking about the pivots that we're going to talk about in the future. But based on the Fibonacci rules, you could start selling on your 23 level and then close on your 38 level, and then when it goes further than 38, you can start selling again, and when it reaches 50 level, you can exit again, and you can do that back and forth. So it's going to reach a level and give me a retracement. I can put my stop loss here, or I can start buying, put my stop loss a little bit below my 50 level. But if I were you, I put it here at the tip of my pivot here, or a little bit below that. So I could start buying here and put my take profit on my 23 level. So when the price goes further than my 23 level and my zero line is broken, my Fibonacci is not going to be reliable anymore. So it's a very important point. When your price goes further than your zero line, it means that your Fibonacci is not reliable anymore. So when your zero line is broken, don't continue your trade. When it's broken, it's unreliable. So that's a very important point. I could have drawn a more overall Fibonacci. I could have connected these swing highs like that, and you see that the price has retraced before it even reached the 50 level, and it retraced to the 38 level. I could have started selling there, and I could have put my stop loss a little bit above my 38 level. Try not to put it exactly on the line. Put it a little bit above that. So if I had sold here and I have had put my stop loss here, it would have reached my stop loss. So that's telling me that I have an uptrend. So if you had paid attention to the trend line, you had the confirmation that when I had connected these two swing lows, two swing highs here, I have a trend line. So I shouldn't expect the 50 or 61 level. I could buy here and then close the deal when it reached the top wall there. I'm going to repeat Fibonacci for the last time. Let me move on to a better chart so that it's not very complex for you. I'm trying to find a great chart. There are a lot of things on my chart. I apologize for that. So in here, it's a good chart. So I have a swing low here. Imagine I don't have this part of the chart. I'm going to analyze them one by one. So I have one swing low here and a swing high here. So when I see a swing high or a candlestick with a long shadow, it is telling me that I can draw a Fibonacci. I'm going to talk about candlesticks in the future. So, but when I see a swing high here or I have a swing high at the top, I can draw a low to high Fibonacci like that, and I can start selling here, gain the profit at 38 level. You see that it wasn't able to go further than my 38, and it retraced to 23 level. It is telling me that I'm going to still have an uptrend, so I can draw my trend line, connect these 2 points here, and I have another trend line like that. So until the price is inside the channel, I can start buying. You see that my zero line is broken here, so it means that I don't have any other Fibonacci's here. When my zero line is broken, it means that the Fibonacci is unreliable. It is giving me a warning that we're going to have a more overall Fibonacci. It means that overall Fibonacci is Fibonacci in my longer time frames. For example, in the daily time frame, I'm going to show you the fractals as well. So where the decline has started, I can connect the swing high to the swing low. Why was the zero line broken there? Because the price was trying to reach my overall Fibonacci. And between this overall Fibonacci, I have more partial ones. You see I have had a swing high here that was broken. My 61 level was broken. And I can update it to here. As you can see, I have a swing high and a swing low here. I've had a downtrend and the market elasticity is downward. And this is the trend line here. This is my trend line. And I have another trend line that connects these 2 points. So I've had a trend line here. I've had one swing high here and another one here that I can use for drawing my Fibonacci. On my 23 level, I could have bought. Imagine we're at this part and we don't have that part of the market. So I can sell here and put my take profit here. And I could buy here, put my take profit here. It has reached my stop loss there. So I will wait because it's going to have fluctuations inside the channel. It has gone further than my 38. So I can put my take profit there. There's an important point about my Fibonacci. The longer the time frame that you have drawn your Fibonacci in, the more powerful your analysis and your Fibonacci. But the shorter the time frame that you have drawn your Fibonacci in, your analysis and your resistances of the Fibonacci are going to be weaker. And another important point about Fibonacci, that is in your longer time frames, daily time frames or longer, your 38 and 61 levels are your most powerful resistances. So when your price reaches the 38 level for the first time, there is an 80 or 90% possibility that you're going to have a retracement and the price is not going to be able to go further than your 38 level. It's in your longer time frames. So in your longer time frames, you can trade easily when it's the first collision. But in your shorter time frames, when you have more fluctuations and more swing highs, the Fibonacci is weaker and less reliable. You see, I have a partial Fibonacci like that. I've had a swing high there and another one here. So I'm going to update it to here. I told you that in Fibonacci we have a movement and a retracement, and that's that. So the price has gone up here. It has gone further than my 50 level. The elasticity was downward, so I shouldn't expect it to reach my 61 level. So it's going to retrace to my 23 level, and when it reached that, I can update my Fibonacci and draw a new one. And I can draw it either from low to high or high to low like that, because my overall trend was descending. I told you that the elasticity was downward, so I shouldn't expect this level to be broken. So in here it has broken my 61 level and it has reached the 100 level, so it's going to go up again. And it has gone further than my zero line. When it goes further than my zero line or zero level, it means that the Fibonacci is not reliable anymore. So I'm going to have to draw a new Fibonacci. Excuse me. The previous Fibonacci was this, from this swing high to this one. So when the 61 level is broken, I can expect a 78 and 89 level, but I'm going to talk about those levels in the future. So when your 61 level breaks, you have to expect this 100 level. So, or when your 61 level is broken, you can drag your 100 level and put it on your previous swing high. So I'm going to update my partial Fibonacci's to the overall one. So expect that the price has gone up again and it has gone further than my 61 level. And after that, I'm going to update it to my next swing high. So when I keep on updating my Fibonacci, that eventually I'm going to have my overall Fibonacci. So the partial Fibonacci's make the overall ones. until the 61 level has been performed here, you can't update your Fibonacci. Your 61 level has to be reached, and after that you can update it. So when it reaches the 61 level, that will be the swing high for me, the swing high of my trend. So, and after that there's a possibility of a retracement. So based on Fibonacci we can know the swing highs and swing lows, and also the overall trend lines. I hope this was useful for you. If you have any questions, you can ask. If you didn't understand a part of my teaching, you can leave a comment on the website and I will answer you. I hope everyone has a great day. And I hope these two strategies was clear enough for you. And last but not least is that you have to practice. The more you practice, the more experience you're going to have, and the more professional you're going to get in the market. You're going to have less mistakes and errors, and you're going to know when you've had a mistake or a problem. So try to practice all the time. And don't think that you are professionals now, you don't need to use the strategies anymore. No, this is a mistake that I myself made. I have been on the market for 11 years. When I'm not trading on the real market, I practice on the demo version of my accounts, and I keep on gaining more and more experience. So that maybe 18 hours a day I'm on the market, and I'm working on the market because this is my job, and I keep on finding better strategies, more secrets in the market, and I'm willing to teach you these secrets and strategies to people who want to start trading and start analyzing. So try to practice on your demo accounts. Please don't start with the real accounts. You have to practice first. Don't try to gain experience on the real accounts. Try to start on the demo versions first, and then you can move on to the real version. I hope everyone has a great day. Goodbye.